Hey guys, it's Andrew Malkoski with the Denver 100 here, and I'm hanging out with Bill Schaeffer again from Arrowhead Capital Mortgage, and we have been talking some mortgage stuff. You work in some mortgage products that most don't.
Correct.
Talking specifically about investment products.
Yep.
And that's kind of a big umbrella with a lot of different things under it. So enlighten us a little bit. I mean, when
Sure.
we're talking about investing into real estate, what are some of these different programs that you are working with that we're not going to get most other
Sure.
places?
So I've partnered with a couple different lenders that are nationwide, so not just here in Colorado, but they're offering private money, fix and flip money, and then having the ability to refinance them out of those private money, those fix and flips, into long-term loans. So it is a great tool for those that want to start building generational wealth in real estate by buying that house that might need some significant updating that's going to cost money. But if the buyer doesn't have that $200,000 to buy the house and then put into the rehab, how can they finance it?
Sure.
So with private money, they're going to charge a little bit more on the interest, but they're going to be invested in that property as well, because they're going to essentially hold a deed and hold a note for a short time while that investor's going in. They're the owner of the property, but they're using the private money to come in, update those cabinets, update the flooring, all of the stuff that needs to go in to take a house that may be a beautiful home in 1970, but as we're sitting here in 2020s, needs that modernization, needs that automation, needs all of those things for the turnkey. And that's where private money can come in to help these investors. And whether the investor then decides 9 months down the road, they bought this or acquired this property that was worth 100, but they put 100 into it, is now worth 3 or 4. If they want to sell it, great. They're going to get their profit. They're going to pay off the private money and move on. Or what we're seeing a lot of people do on the investing side is realize, hey, the rental market is really strong. I'm going to put a tenant in here, and now I'm going to get monthly income. We can then take that income from the monthly rental and do what's called a DSCR loan, or a debt service credit ratio loan, and give them a 30-year fixed mortgage based solely on the property. It has nothing to do with the borrower's income. It's all based off of the property. Does it cash flow? And if it cash flows, they qualify, and we can give them a loan for a 30-year fixed and have the mortgage, or have the rent, cover the mortgage.
That is amazing. Talk to me a little bit more about the private money, fix and flip money, because this is very much something that most lenders aren't doing, right? It happens to be more of a subset of lending that you only see in wholesale circles for fix and flips.
Yeah, it's absolutely exactly for that, where some lenders won't even touch it because they don't have the access to the capital, or they don't want to even deal with this product set. Absolutely.
And that's one of the things that I think makes you very unique, is your ability to offer that and then move into those other more traditional lines of credit or loans that so when people are legitimately thinking about fix and flips as a possibility, or fix and holds as a possibility, you being able to handle all that in one place is really interesting.
Yeah, and it really allows me, and I do find it to be completely interesting, like you said, to take that, and I've got several clients who buy that small place and then continually save up, maybe put a roommate in there, and then, okay, now I'm going to go from this one bedroom and I'm going to go get a smaller place that's got 2 bedrooms, put that roommate in there and put another roommate in, and then keep building that generational wealth. And whether it's a fix and flip or whether it's an investment loan, it's nice to be able to walk my clients through their dreams and their visions, because if they can create it and dream it, we can find a way to get it done through a lot of different lending opportunities.
I think that's very cool. You also had a couple other products that were about rehab loans, and I for all of my experience in this industry, don't know anything about it.
Sure. It's not typical here in Colorado, here in the Denver area a ton,
Okay.
because a lot of ours have already gone through this
Okay.
generational rehab. But we do see it in the Colorado metro, Colorado, in Denver. Anyways, but the easiest way to do it is if you want to live in the property and then rehab it, we have a loan for that. Or if the property needs to be truly gutted, there is an FHA product out there where you can literally acquire the property with enough money to cover some of the renovations and still be living in your old residence while you're rehabbing the current one. And
With the idea that you are moving into
correct.
the new one.
Yep. There are certain guidelines. Again, these are insured by the government
Sure.
via the FHA program. And so there's different guidelines that they've got to have. They've got to have an overseer, if you will, on the project, and they've got to follow certain things. But absolutely. Then once the project is done and they have the CO, certificate of occupancy,
Yeah.
jargon that we
Yeah.
use.
Got it.
Yep. Then they can move in.
Very cool.
And then there's those that they can just do the kitchen or just do a bathroom and live in it while they're rehabbing, but get enough money at closing to acquire the property to cover those rehabs and renovation costs.
What do interest rates look like on those type of loans compared to, say, a conventional or a regular FHA loan? Because it is an FHA-backed loan, but I imagine you're not getting the same FHA
Correct.
rate.
You're never going to be, anytime you're asking for more money,
Sure.
you're never going to get the cheapest money on the market. There's more risk for the investor. So I always say it's going to be 0.25% to 1%, depending on what you're doing. Maybe more than that cheap lowest rate that you're out there seeing to cover some of this renovation or rehab cost. So it just has to be taken into account. But if that can give you a jump start to find that not fix and flipper, but just find that home that needs some update that, hey, you don't like the carpet, you don't like the drapes, but the kitchen really needs to be gutted. Okay, well, then maybe you can cover the carpet and drapes and we can do a loan to cover the bathrooms and the kitchens.
So the reason why I bring that up, for any of you out there that are thinking about this, right now in our marketplace, there are more there's more inventory and more inventory coming.
Yep.
Right. So here at the Denver 100, we think that by June, July, we're going to be north of 12,000 units in the 8-county metro area available. Now, that's great for buyers because that means that buyers have options.
Yep.
But there's a ton of these options out here that need love.
Yeah.
But what buyers really want is they want something that's move-in ready. So if you can take an option like one of these rehab loans, you go get a deal on a home that is being sold well less than it would be worth if it was fixed up. You can do the fix up.
Yep.
And now you have instant equity in a property that you were probably able to negotiate a deal on because it's been on the market too long because it needed to work in the first place.
Yep.
I mean, this is where opportunity is born.
Absolutely. My first house, and I'm sure we all can relate, needed love.
Sure.
Needed sweat equity. And my wife and I, we came in, we gave it love, and we tripled our equity by the time we left.
That's incredible.
If we would have walked past that house
Yeah.
and didn't like the carpet or the wallpaper or the weird door that was in it, we would have lost out. But because we saw the good that was in it,
Very cool.
Yeah. So
thanks for coming and sharing.
absolutely.
I appreciate your
I
your
appreciate
insight.
you.
Thanks for tuning in, guys. If you need any help either buying real estate or getting the loan to buy the real estate, please get a hold of us. We're happy to help.